classes. That brings us to our move of the day, the GLD, otherwise known as a gold ETF, falling nearly 2% as gold got whacked. Our next guest says the yellow metal is your best and safest bet in a stalling market. He's here to tell us why. It's time to go bear hunting with Euro Pacific Capital CEO Peter Schiff. Peter, it is good to have you. Welcome back to the NASDAQ.
Thanks for having me back. I forgot how casual you guys are. Otherwise, I would. You're over my jacket. Yeah.
But looking good. All right, Peter, so let's get to it. Gold. You've been bullish gold for a long time. What makes it more compelling in this environment?
Well, first of all, unlike the stock market, gold is still up considerably on the year. It's down today because the Fed is back to its old tricks. I think they're bluffing an April rate hike. You know, they played that game all last year. They waited until December to finally pull the trigger, a tiny rate hike, and that was a disaster. We were off to the worst stock market start in history, so I doubt the Fed wants to repeat that and do it again in April. You know, the only reason the market rallied was because they backtracked. And now all of a sudden they're testing the water on backtracking again, and I don't think they're going to like what happens.
Do we need to have stocks go down in order for gold to go higher?
No. In fact, the funny thing is gold went down today because people are afraid of the Fed raising rates. Well, what happened the last time the Fed raised rates? Gold went way up. So if anything, if the Fed does that again and the stock market tanks, gold's going to get the safe haven bid. But ultimately, I don't think the Fed wants to put another pin in this bubble. I agree we are in a recession. I don't think we're going to a recession. I think we're in one right now. And I don't think the Fed wants to add a bear market to a recession. I think they're going to keep this bubble going. They're going to talk as if they can raise rates because they don't want to admit that this is a bubble, but they don't want to let the air out. So I think this is a buying gold.
So for a good portion of this year, a lot of these moves, the gold went up and the dollar went up on the same day. Can that correlation be broken? The old correlation of dollar goes down, gold goes up. Can the dollar and gold over a long period of time go up together?
Well, they could, but I don't think that's what's going to happen. I think the dollar is going to go down, too. In fact, against most currencies, the dollar is down this year. The dollar was up today, but if you look at the trend, I think the trend in the dollar has reversed because the dollar gained for years based on the idea that the Fed was going to be raising rates. But I know that they can't do that because the minute they raise rates, they put us right back into recession, and now they got to cut rates. They got to relaunch QE, and so ultimately the dollar is going to sell off because it's not just a buy the rumor, sell the fact. It's a buy the rumor and then sell because the rumor's not true, because the Fed can't actually deliver the rate hikes that the market expected.
And I hear you. And you know, the argument on gold, I think gold's probably going higher for different reasons. But you've been bashing the Fed forever. And the reality is that you said interest rates were going to go to 10% because the Fed was financing something that they couldn't do in this economy. The statements about the economy ultimately get you to a place where, first of all, Fed is, as far as I'm concerned, the market can remain more irrational, and I think you must believe it has to have been for the last 6 years, but it's been screaming straight higher longer than someone can stay solvent. I'm not saying you, but I'm just saying the point is, how long do you try to bet against the Fed in an environment where the Fed is proven they can do whatever they want, and people that have tried to game the Fed have been wrong?
Well, betting against the Fed has, in fact, been very successful. The Fed has made a lot of mistakes. I mean, look at the disaster that happened in the housing market because of the Fed, and there were people that made a lot of money betting against the Fed. And, you know,
talking about 08?
Look, and, the housing bubble inflated over a number of years. But also, if you bet against the Fed and bought gold, look where gold was in 1999, 2000. It was under $300 an ounce. The Fed is one of the main reasons it's now above $1,200. So buying gold is a bet against the Fed, and that bet has paid off more than stocks. Look, the Fed has screwed up this economy.
I just don't agree with that. First of all, stocks went from 650 or 666 and went up 3.5 times. Gold went from a peak and is down 2,000 bucks. I mean, you're in a place here where everything the Fed has done, you may not like Fed policy from a pure economic perspective, and it may be something that's a road to ruin, and who knows? I don't like the fact that we can't normalize interest rates either, but the reality is, to me, that has worked for asset prices.
But so what? It hasn't worked for the overall economy. Why do you think they can't normalize interest rates? Why do you think they're still so low after 7 years? Because this is a gigantic bubble, and if the Fed tries to raise interest rates, we will have a worse financial crisis than the one they caused in 2008. And so you can't say that this is a success. It is a complete failure. People just don't know it yet because the high hasn't worn off.
I think pumping liquidity in markets that were seizing up and actually you have institutions that were failing right and left. This is the job for
the Fed lit the fire, and now you're claiming that we should give them credit for putting it out. But they didn't put it out. They put it out with gasoline, so it's coming back bigger.
Here's the difference with the Fed right now. The Fed is actually reversing course, or trying to reverse course. So you're actually going along with the Fed if you're bearish here in a sense. They want to pop this bubble.
No, they don't. So they don't even want to admit that it is a bubble. But why do you think on this show, when they first started doing this, when they launched QE, when they brought interest rates down to zero, I said it was a monetary roach motel. And I said that for a reason, because I said once they check us in, they can never check us out. And that's what they're finding out right now.
So where's the dollar going? Because he thinks it's going higher. Where do you think it's going?
I think it's going lower because I don't think the Fed is going to be able to deliver these rate hikes. I think we're going to get back to zero, maybe even negative. I think they're doing QE4.
So we're in a recession now. How much worse does it get then? If we're in a recession right now,
I think this recession, which
we're not in a recession.
Hold on. Let him.
You never know you're in a recession until afterwards. They didn't tell us we were in the Great Recession of 2008 until it was almost over, right? So I think by the time they revised the numbers, I think this recession that we're in now probably began at the end of last year, early this year.
How much worse does it get when they raise?
I don't think they're going to. Eventually, the market's going to force higher rates. But I think this recession is going to be greater than what we now call the Great Recession. So we're going to have to rename that one, because this one is going to be bigger.
It's going to be the worst recession.
Yeah, and I think whoever replaces Barack Obama is going to inherit a worse recession than the one he inherited from Bush.
All right, Peter, thank you for stopping by. It's
My
always a fiery discussion with him. Oh, and happy birthday.
Happy birthday, young man.
Thank you.
All right, Peter Schiff, CEO of Euro Pacific Capital. All right, a lot to unpack here.
Lots to unpack. I mean,